All right, we are live, Russ. I want to welcome everyone on this absolutely fine Monday morning to our weekly insights into the Orlando real estate market. How are you doing, Russ?
Oh, fantastic. It's a pleasure to be here. Thanks, Joe, for inviting me on here.
Absolutely. No, I'm glad you're here. I think we have quite a bit to get through today, and we're going to do that
Yes,
while being conscious of everyone's time this morning. But
great.
we're doing these sessions live every Monday, where we look at the latest trends, where the direction in the real estate market is heading to, any news, and we're bringing that live analysis every week to you on what we call our Monday morning market analysis. This is your opportunity to get a deeper look into this real estate market trends here in Orlando, Florida. And I think it's such an opportunity because we have with us Russ, who is a seasoned and a well respected real estate advisor here in Central Florida. And just what a gem that we have with us, just and an opportunity just to pick your brain as we go through these segments to make sure that our audience, especially those who are aspiring to become real estate investors, those who are currently engaged and active in the real estate investment here in Central Florida, and then also to our real estate agents whom you want to have the latest information so that way you can better advise your clients. This is
Absolutely.
the place for you because we believe that knowledge is power, and especially in real estate, if you want to be successful with this large investment, you want to have the greatest and the latest information at your fingertips.
Absolutely.
Yeah. So again, I won't belabor the welcome. I can talk as well, so I won't belabor the welcome. So, Russ, welcome to our discussion today. It is my pleasure to welcome you. And let's talk about this market trends. So there's an article that came out towards the end of last week, and that's
Hmm.
the one that we're going to go through, and we're going to post the link to the article in the description. But let's jump in. So this article that we're referencing, it highlights some of
Hmm.
the top key performing cities when it comes to real estate investing. Do you mind if we just kind of, can you share what are those cities and,
Sure.
what is their appeal?
Absolutely. We get there's a lot of different market reports that we get, and a lot of our job is to distill down what is the valuable information in each one of them. So one of the market reports that we're going to be going over today that I want to go over today is talking about the best cities to invest in for rental property in 2023. And it did a fantastic job of looking at different locations across the United States. And there are some highlights that really stood out to me. Um, some of the standout cities for property management right now, property investment right now, is Austin, Texas, Phoenix, Arizona, Nashville, Tennessee, Raleigh, North Carolina, and Orlando, Florida. And in particular, Orlando, Florida actually really is very much at the top. Matter of fact, one of them, they looked at all of the counties across the United States, all the counties across the United States, and looked for the highest potential annual gross rental yields. Highest potential annual gross rental yields for 2023. And it said that out of the top 10, four of them are in Florida. So Indian River County, Florida, Collier County, Florida, Charlotte County, Florida, Palm Beach County, Florida. And on top of that, Orlando, Florida came as one of the top in the United States
Wow.
for top rental properties in the United States. And in particular, best cities to buy property. Orlando, Florida was number one for one bedrooms and two bedrooms, which are
Hmm.
one bedrooms and two bedrooms are actually one of the top for property analysis right now. So when you look at these things, what some of the different factors you want to look at are, cities that have promising growth, economic stability, and favorable market conditions for real estate investors. So those are some really some big highlights that stood out to me. That Orlando, Florida, right now is absolutely a high target market for rental property investment.
And as a seasoned real estate advisor here in Central Florida, I'm sure you have seen the uptick, right?
Yes.
With, I mean, so many people who are moving into this region, so that makes rent a very high demand. Rental properties very high demand, but they also have these people who are able to work remotely now,
Hmm.
whom they're coming in here and they're seeing, maybe they're relocating from California, some of these very high, high end markets, and they can buy two homes here, right? So they can
Right.
actually,
Yes, exactly.
live in one and rent the other one. But that's very interesting that Orlando is the number one market right now that we're seeing. What
Yes.
specific factors would you say make it such an attraction for investors?
Well, the number one is, of course, is job growth, right? Robust job growth is huge. You also looking where there's areas that the populations are increasing versus areas where the population is decreasing. A lot of that comes down to those two factors, which is very much driven on job growth,
Mhm.
is what creates strong demand for housing. And so then when you take that into account, then it's going to be places that are favorable business climates, where you have diversity of industries, where you have entrepreneurial opportunities. I mean, those are types of areas that drive those factors, right? They
Yeah.
drive strong job growth, and then that drives population growth. And it's all a spiral up in benefit
Mhm.
to people that are looking to invest in different areas.
Yeah, Russ. I mean, those are really important factors to consider when
Hmm.
when one is analyzing these trends and trying to make informed decisions. I wonder, are there any other factors that investors
Hmm.
should keep in mind when they're exploring what makes sense, especially as they are looking at this market?
Right. Well, one factor is obviously affordability, right? So,
Mhm.
you can be in a very high value area, but if it's not affordable, then that doesn't make it makes it so that it's not able to invest in. And so some of the things that create relatively affordable housing are things like uh, potential for long-term appreciation. Um, what areas are growing, and so getting involved in those areas on an early stage, versus areas that have had long-term high prices. Those are so you really want to go for the areas that are growing
Yeah.
because those are still having opportunity, and
Okay.
that it makes the things so that you still have affordability on it.
Yeah, that's a key advantage. Making
Right.
sure you have that in consideration. Now, something that we love to talk about, and we have, did a segment on this last week,
Mm-hmm. Yes.
on market research. Um, can you shed some light, as to how can an investor, I mean, just in a nutshell, I know, people can go back and watch the other video,
Mm-hmm.
but how should an investor approach market research?
Yeah. Well, first of all, you definitely need, before you get involved in any type of investment, you need to do your due diligence. You need to do some market research, and some of the different things that we talked about last time are talking about local market trends,
Hmm.
things like rental demand, vacancy rates, property appreciation rates.
Right.
We need to look at those different types of factors, but it really comes down to this: is that you need to do your research, and you need to be able to have somebody that can advise you on that. And that's where, finding the specific neighborhoods, finding the specific cities, finding the counties that provide the best opportunity, that's where you definitely need a seasoned advisor.
Yeah. And I mean, yeah, because it's tricky. This is can easily get tricky, and you need someone who is on the ground.
Mm-hmm.
It wouldn't make sense for you to get an advisor who is operating out of Tampa, right? And you're
Right.
analyzing the Central Florida market. Um, so I guess to my next point is there is so much information out there. It can easily put in, maybe some of these key indicators on
Mm-hmm.
Google, and you have a ton of results.
Right.
What are some reliable sources that investors can trust and they can sink their teeth as they're doing this market research?
Well, definitely real estate investment associations are a really great start. Also, getting involved with somebody that's locally in that area, get involved with a local advisor, a reputable local advisor is incredibly valuable. Um, Looking at you can definitely do your own search on things like going through and looking at sources like government data
Mhm.
that is not going to have any bias. So those are some great resources for looking at that type of information. Definitely finding a local advisor that you're able to feel comfortable with, that knows the market, is incredibly important. I mean, that by far is probably one of your best starting points.
Yeah, your greatest resource.
Right, should
Uh,
be.
yeah, absolutely. I mean, I think these are excellent suggestions, and one or some that should not be taken lightly. I mean, this is a
Right.
large investment, and you want to have the best information available and the trusted advice. I think
Hmm.
you know, this is not a situation where you're just kind of testing out. You should be well informed, but with this is part of life as well. Risk is part of doing business,
Hmm.
especially in this industry. In talking about risk management, Russ, what strategies can investors utilize to employ an effective risk mitigation,
Hmm.
as they get involved or look to get involved in real estate investing?
Well, first of all, there's a lot of risk factors that are inherent in any investment, and some of those are difficult to mitigate. The proven and most true way to mitigate risk is diversification. Diversification is the key. I don't care if you're talking about stocks. I don't care if you're talking about any type of investment. It comes down to diversification, and real estate is no different. So if you're looking at trying to mitigate some of those risks, the best way you can do that is to diversify your risk. Diversify it either by city, diversify it by state, or diversify it by neighborhood. And that may be difficult when you're talking about larger investments, but when you get your first rental property, you work out a lot of the what makes you feel comfortable, what makes you feel uncomfortable about your first rental investment. And then when you're looking at your next one, you don't necessarily want to buy the house right next door. You want to look at least a different neighborhood to diversify your investment and diversify your risk across multiple different things. And that's also comes down to and doing your due diligence, as we talked about earlier. That's definitely a factor in to mitigating risk. Finding an experienced property manager. A lot of people do try to go kind of DIY, do it yourself at the beginning, and they end up spending more money trying to be a do it yourself versus coming with a property manager who's going to be able to, at the very least, show you the path of what's the right way to do things. And
Mhm.
you know um, a lot of people do it backwards, right? they
Yeah.
they try to do it yourself first, when really you should try to go with a property manager it's worth that expense to learn about investment properties, and then maybe try a couple by yourself in the future.
Yeah.
But really, it's having an experienced property manager. It's worth its weight in gold, and like I said, it can help you avoid a lot of major pitfalls and make it a seamless passive investment rather than a active investment.
Yeah, that is a wise advice, absolutely. And you know, it depends. Yeah, I think your strategy does matter. I mean, you don't want to have that property that can easily be picked out or singled out as the rental property.
Right.
And unfortunately, a lot of those who are doing this, the DIY route, I mean, there's so many things to navigate and to consider and to be on top of when you're managing a property. And it's especially as someone who is, that maybe they have a full-time job and this is a part-time type of venture. You may lack the necessary time resource to tend to those things. So,
Right.
I love your advice, and we're not saying this because we're a property management company.
Right.
We're saying this as hire a property manager because true the value that you get from that will allow you to get into your second and third and fourth investment properties if you're looking to build a portfolio. I think quicker than actually be pulled into the weeds of managing one
Right.
property where there's not enough daylight for you to consider expanding your portfolio.
Right. Exactly.
So, we are coming up towards the end of our session, and I just wanted to, give you an opportunity as we wrap up to share any final thoughts or recommendations that you have for investors who are looking to invest here in Orlando.
Hmm. Well, so definitely try to take a step back, take a long-term perspective. It's a marathon, not a sprint. And in any type of investment, a lot of people get driven by whatever the discussion of the day is, and that can lead you down the wrong path. It can make you to buy the high versus buy the low, right?
Mhm,
And
mhm.
so where you want to find where the trend is going up and getting involved in that trend versus uh, just jumping on the bandwagon after everybody else has already gotten on. And that's why I think being in a long-term perspective, looking at how you can get involved and diversify yourself across many different neighborhoods, like we said earlier, and properties. Those are the keys to long-term investing, is to put yourself in that long-term perspective, and that is a much better way of getting involved. Anybody that's ever day traded stocks will tell you that that's not the solution, because it's too short term. You need to think from a long term perspective, and that's why a lot of people that are long term investors um, tend to have a lot greater success than those that are jumping in and out of the market on a day to day basis on the newest trend, the newest, whatever is in the news. It's really got to be a long term perspective.
Yeah. No get rich quick scam here or
Right,
strategy.
right. It's got to be long term perspective. Yes.
Well, Russ, thank you so much for just sharing these valuable insights and sharing some of your expertise with us on how to best navigate this Orlando market, where some of the hot spots are, and those looking to get started in this, or those who are already in this, just looking to expand your portfolio.
Mhm.
It's kind of giving some tools where to start. And there's so much more to these conversations, and we highly encourage you that you do follow our page because we're committed to bringing these, excuse me, these sessions segments live to you every week for your benefit. And if you have any questions, things that we maybe didn't spend as much time because we want to keep this short for you to digest. please feel free to either comment below or send us an email. We are going to put all of our contact information in the description below for you to have. But please reach out to us. We'll be more than happy to talk to you, to share more of what we see and any tools that may enable you to become a more knowledgeable real estate investor here in Florida. So, Russ, thank you again so much.
Thank you,
And I
Joe.
can wait for the next session.
I'm looking forward to it.
All right. Have a great day.
You too. Take care. Bye.